When a business is accurately tracking their expenses, the amount of tax savings generated just from capturing those deductions to the fullest extent, it makes a big difference. What's up, everybody? It's Ronnie. We're back for another episode of Tax VAR, where we react to social media tax advice, whether it be Canadian, whether it be from the US, and we give it a rating. Either we agree with the on-field decision, we can hand out yellow cards, we can hand out red cards based on the advice being given. My name is Ronnie Fogan. I'm a Canadian and US CPA. Let's hop into it.
You are adding up your invoices and reporting that to the CRA for taxes every year. You are literally tipping the CRA for nothing. They don't do anything for you. And I saw this click for the first time in person last week. I sat down with a client to update her books for the first time ever. And she walked in saying all the things that every entrepreneur says when they start working with a bookkeeper, which is, I'm sorry, I'm so behind. I'm so bad with numbers. Money's just not my thing. Whatever it might be. Choose from like the million different things that people say. But instead of making her feel like she didn't know what was going on, we just dug in and I pointed out the real life cost that she just never counted because she didn't know she could. The slice of her home that she was using for her office, the business use part of her car, all of the equipment for her business and office expenses and bank charges and payment processing fees and way more. And then I broke down the line that no one really tells you when you start a business, which is in Canada, we're just taxed on profit, not your whole entire Stripe total. And that's when I saw everything click for her, that bookkeeping isn't just some busy work that we're doing because we're business owners and that's what we're supposed to be doing. It's genuinely what keeps your profit accurate. It keeps the numbers making sense in your business, and it actually lowers what you owe to the government at the end of the year, because we are done giving extra money to the government when it's supposed to stay in your pocket. Okay?
All right. Hey, there's a lot to unpack here, but first and foremost, this is really sad to see. And he's spot on. You see it a lot. I personally see it a lot within the creator industry, but because it's also, you'll see it with a lot of service-based businesses where you're trading your time and you're getting paid for a service. So think of content creators who are, getting paid for brand deals, promotions. So they're recording a lot of videos, sharing those, uploading those. You don't really see expenses that you're incurring, which those businesses, so creator businesses, freelancers, service-based businesses, a lot of the times they'll opt to not even have any form of bookkeeping. They'll just track the revenue, the income that they're earning, without tracking the expenses on the other end. It is so clear as day to see, when a business is accurately tracking their expenses, the amount of tax savings generated just from capturing those deductions to the fullest extent, it makes a big difference. The gentleman mentioned a slice of your home office, so deducting a portion of your rent or your mortgage interest, the equipment that you are utilizing. In the case of content creators, we're looking at cameras, we're looking at gears, we're looking at DJ Osmo if you want to get that. We're looking at laptops for your editing if you want to get a new MacBook and you're using this for your content. These are things that we want to make sure that you're capturing, and not just the AdSense that you're getting on a monthly basis, not just the affiliate marketing deposits that you're getting on a monthly basis, not just the brand deals that you're getting on a quarterly basis. We want to make sure that we're capturing the other side, which is the expenses, because as a business owner, you are not taxed on your revenue, you're taxed on your taxable income, your profit, revenue minus expenses. He is spot on with this. We could go on and on about this, but the main takeaway is, do not underestimate the power of deductions which will flow from your books. If you don't have good books, none of this can benefit you, right? You're starting behind the line, not even where the start line is. You're starting at a handicap way behind the line. So you want to make sure that you're hiring a bookkeeper, man. Nowadays you can get one for the low. So make sure you hire that bookkeeper. Make sure your books are maintained accurately, and it's to your own benefit. Usually, for sure, I can say this confidently, the bookkeeper low-key pays for itself through the tax savings that they help you generate. It's that simple. The bookkeeper pays for itself just based on the tax savings that they help you generate. They aren't necessarily giving you tax advice, but just their operational work is so crucial to your ability to generate tax savings that I guarantee you that they are paying for themselves. The tax savings that you're generating from having a bookkeeper, pay for that bookkeeper on a monthly basis. So if you don't have one and you're a content creator, make sure you go around and go get one. They're on Upwork, they're on Fiverr, they're all around. So make sure you get yourself a good bookkeeper so that you can activate your tax savings banks and stop tipping the CRA or the IRS for my Americans, because we're done with the 90s. We don't do that anymore. You know what I'm saying? So green light on this video. I agree with the on-field decision. The VAR verdict is we agree with the on-field decision. Great video, great topic. If you guys want to see more videos like this where I react to social media tax advice, let me know in the comments, man. If there's a video you want me to react to, tag me in it. It has been a pleasure. Until next time.